Hi guys, Victor is my name. I'm the analyst or the trainer, Tiger Weight at TW Educational Center. Welcome all. So I hope you have, I would request guys, you mute your microphones so that we get started. So I'll be going through a little bit of introduction. So my classes are usually interactive in a way that you can always ask a question, you can always raise your hand and basically ask anything. So anything Forex related, we are here. So you can message me as I'm continuing with the training. So let me share my screen. Just a minute. Okay. Three.
Wako Nairobi saa mbili akifanya nini na hakuna restaurants.
So kindly mute your microphones. Yeah, thank you. So guys, kindly mute your, yeah, welcome. So welcome, Victor is my name. I had promised you guys we're going to have our first class. I believe it's a Friday. So, but we'll give you the schedule for the online classes. We'll be having them every week. So at least 2 or 3, depending with the numbers we are getting. So for today, the theme was, if you checked your WhatsApp, why should you be in the market? So let me check it. So I'm going to give you the why of why should you trade Forex, or why should you join the markets? Why should you not be out there and at least, join us and at least be making some residual income? Because in the times we are living in, I believe like last year, we had a lot of classes. We did almost 20 or so classes. So it's good for you to get this knowledge. So basically, it helps you grow. So let's begin immediately. So what's the Forex market? It's where banks, businesses, government, investors, and traders come to speculate. On, just a minute. They come to speculate on currencies. So for example, I'll be giving you in a layman's language. The Forex market, it's also referred as FX or currency market. The turnover is 5.3, but because of what happened, last year we had 1.9 trillion that was pumped in the economy. Kindly mute your phone, mute your mic. Is Robbie mute? Okay, thank you. Let's continue. So I was saying, last year things happened, and whatever happened. Corona happened, and so many other things were ongoing. So the US economy, they had to pump in 1.9 trillion. Right now, Biden is about to pump in another 2.5 trillion. So that means this liquidity you're seeing here written 5.3 trillion, it has gone up. By end of last year, it was at 7 trillion. So the amount of volumes that are being exchanged on a daily basis, that means the money that is moving every day. For example, let me give a good example. You want to buy a car, you'll have to change your shillings to dollars. And then probably you'll talk with a dealer in Japan. And then you'll do an invoice, you'll send half of it or 80%. And of course, you get your car. The moment you transact the shilling to dollars, you take part in the Forex market. So that is one way. Another way is the farmers. For example, in our country here, we do a lot of agriculture, and Europe love flowers a lot. So when the flowers are exported to Europe, we are paid, or the farmers or the companies, they are paid in euros. Once the money hits the banks, they have to go negotiate a very good rate, the rate whereby they are able to come with a better exchange rate between the euro and the shilling. The moment that happens, you have taken, or the basically is a company or the country Kenya and Europe has been able to come up to an agreement of the rate. So that is one also example. So it is usually open 24 hours a day. So one thing I really love about the market is that 24 hours a day, 24 hours a day, 5 days a week, you're basically are able to trade. Yeah, thank you. I'm seeing questions here. So always drop them here. I have poor network. Yeah, we are recording. So no worry. So if you won't be able to get it, we'll send you the link. At least you'll be following through. So Giddy, yes. So, but for the guys, let's continue. So it's open 24 hours a day within a week with the most important trading world centers. So these ones, they are, let's do this. The most important trading, they're located in London, New York, Tokyo, Zurich, Frankfurt, Hong Kong, Singapore, Paris, and Sydney. So I want you guys to understand these are some of the most important world trading centers. And number one, the biggest is London, because London is a big market. Most of the commodity exchanges, for example, copper, gold, silver, all of them mostly are traded in the London and also the New York markets. So it should be noted there is no central place. So most people will ask me, how or what am I selling? What is the product? The product basically is money. There's nothing else we talk about. Our product is purely money and nothing else. So basically what happens is you're exchanging money for another money. So money is a commodity. For example, you will need bread or milk, or you'll need anything, transport. So for you to move from here to this place, you need, or for you to fuel your car, you'll need money. So money is a commodity. So most of the transactions that happen, they have to happen using money. So FX, basically, we are our main asset is money. Though we have other asset classes, which we'll be tackling as we continue, but the main, if we are talking about FX or the Forex industry, we are talking about money. So it is open 24 hours a day. It should be, there's no central marketplace. That is to mean if you have an internet connection and also you have a good laptop or phone where you are, you can access the market. The world we are living in is more of a globalized world. So that is to mean that the more we continue to move on, the more we continue to we become a globalized, means the world is a global marketplace. So it's not like stocks. So like if you need to buy stocks, you'll have to go to the center. For example, Nairobi Stock Exchange, New York Stock Exchange, and the rest. You have to go get a broker, get the qualifications of whatever stock you'll also be charged some fees. But the beauty of Forex, it is a product that is quoted by all the major banks, and not all banks will have the exact price. So now the broker platform will take the feeds from different banks. So for example, this is Bank A, Bank B, Bank C, and Bank D. So me being Bank A, I'll have a quote. So let me show you using my platform. So this is my platform here. So you can see this bid here. So guys, I hope you can see that there's some blue lines moving around here. So whatever is moving here, these are the quotes. So this is the best quote I got as the bid. Bid is what you're getting, and ask is what you're being offered. We also call it offer price. So sorry guys, I had a call here. So basically bid is what you're getting or what you're being offered in the market, and ask is what, bid is what the broker is willing to give you or to bid you. Basically, that's what it's called. Then offer is what the broker is willing to offer you. So the difference, usually call it a spread. For example, you can see this is USD chef. So when I double click on it, you can see there's a red line here and a blue line. So here is when you're buying by market, and here is when you're selling by market. So it happens automatically in a way. If I'm buying USD chef, I am buying dollar and selling Swiss franc at the same time. If I'm selling USD chef, I'll be selling dollar and buying USD franc at the same time. So the beauty of it all is that you're able to make good money, or you can be able to liquidate your profits, and of course make good returns immediately, and you can always withdraw anytime you want. So that is the main point. Okay, welcome you guys. So I was saying, it should be noted there's no central marketplace. So it's a product that will be quoted by major banks. Not all banks will have the exact same price. So now the broker platforms will take all these feeds from different banks, and the quotes we see from our broker is an approximate average of them. Of course, they won't give you the exact, because guys, the broker is not running a charity. They'll need to make something on their end. So what happens is that they'll add up a pip or two. So that pip or two they'll add is what they'll make as commission. So that commission, of course, is what keeps them in business. So the more you trade, or the more you're in business with them, or the more you're running your trades, the more everyone makes money, because every trade you make, there will be a commission on the spread. So technically, that's what it's all about. So now the broker platform will take the feeds from the bank. It's a broker who is effectively transacting the trade against you. So there are things we'll talk about, especially as we continue in our classes. I'll be guiding you to know here, especially on this one. They make the market for you. There are guys you'll hear out there called market makers. I know some guys will tell you the broker, oh, is not doing well. I was requoted. This and this happened. You know, such things. But the idea is the broker is not your enemy. The broker is your friend. And also, I wouldn't really say it's your friend, but it's not your enemy, because you need the broker to be able to access all the platforms. Most of the platforms, basically, you'll need. Like, for example, if I show you this platform, this MT4 platform, let me go to Silver, for example. This is Silver. So for me to be able to have access to these charts, to be able to see these time frames, to be able to see these price quotes, to be able to see the bids, the ask, the prices, to also be able to add the technical tools here, I'll only need the broker, because the broker is the one who will give you all these tools. So yeah, welcome. I'm thinking you guys are still coming on board. So we're still continuing. So our main theme was why. Why should we trade Forex? So today I'm giving you the main reason of why you should be able to learn this skill. Because number one, this skill is what drives the economy. So let's first see a little history of where Forex began. So it's not boring, but let's just go through it a little bit. It's important to have the basic knowledge of the history of the market. So for example, in a nutshell, it's very few, within less than 5 minutes. 1876, there was something that was called the gold standard, or the gold exchange standard, that was implemented. Basically, it said that all paper currency had to be backed by solid gold. I know, guys, especially those who have been in the business for a while, have heard about the gold exchange standard. So basically, it meant that gold had, or basically all paper currency had to be backed by gold. So this was in 1876. So the idea was to stabilize the currencies by pegging them to the price of gold. Why gold? Gold is one of the most precious metals. It never loses value. Even for the last 5,000 years, it has never lost value. That's why we will never even know up to when we'll be able to mine all the gold in the world. It's very hard to know, because gold is also very scarce. It's also a very scarce commodity. So, and also it's one of the main safe havens that most banks or even most investors rely on. So we had to stabilize the world currencies, pegging them to the price of gold. It was a good idea in theory, but it created a boom-bust patterns that led to the demise of the gold standard. So they got to a place and it was like, we cannot manage to support, because we didn't have enough gold. We have said gold is very scarce. So how could they have managed to back all the paper currency of the world using gold? So they abolished the gold standard. It was dropped in the beginning of World War II as the major European economies, as most of these economies, what were they doing? They did not have enough gold to support all the currency they were printing for the military project. So there was a lot of war going on. You remember this was World War II. So it was dropped, and but the precious metal never lost its spot as the ultimate form of monetary value. So it has never lost. Even today, I'll still say it has never lost that ultimate form as the monetary value. So then what happened after that? So let's see what happened. Okay, guys. The world then decided to have a fixed, okay, sorry guys. So the world then decided to have a fixed exchange rate. So this is when Forex was born, guys. I hope you're following. I'm going slowly. And if I'm going fast, you just raise your hand, ask a question, as we continue. So the world then decided to have fixed exchange rates, and the US dollar was the primary reserve. So this was called the Bretton Woods system. That was in 1944. Of course, now it's getting excited. And then in 1971, the US declared it would no longer exchange gold for US dollars. So the Bretton Woods system, now this was exchanging gold for the US dollar. They decided no, this system will not work. So this will mark the end of the Bretton Woods system. So it was this breakdown that ultimately led to the acceptance of floating foreign exchange rates. So whatever I was showing you here, guys, so this is floating. Floating means it's me as bank A or me as bank B coming up with a bid, maybe 0.98201. The other one comes with 802 or 805. So what happens, me as the broker will have to get the best bid, means the lowest bid, means when you're bidding is you need to get the price when it's cheap. And then when I'm offering you, I'll offer you the highest. So that means at least there will be a commission that will be generated between the bid and the ask. So, but this one's a bit technical, so I won't go through much. So let's continue. So the floating exchange rate began. So when the breakdown, it was in 1976, this was effectively the birth of the currency foreign or the foreign currency exchange market as we know it today. So that is what happened. That was the retro history. So now let's go to the main thing or the main theme of the day. So the main theme was why should you trade Forex? Why should you come on board? Why should you? What's the big fuss all over the market? Look at online, look at your app. You'll come up ads all over talking to you about Forex. So what is it? It is basically relates to retail traders like you and me, and it basically involves the speculation of price. So for Forex, we are speculating on the price of one currency against the other. For example, if you think the euro is going to rise against the dollar, you can buy the euro USD. So this is a good example. So I know you guys really love the euro USD. So this is the euro USD here on H4. I love H4 because I can be able to see how it's trending. So you can see this was a very strong downtrend. Then it started coming up. Then it has gone down a little bit. But for the traders, of course, they'll be using mostly the 1 hour chart. So this is minute, guys. Let me put this. So these separators we usually put to be able to differentiate the time zones. So from Monday to Friday. So this was today alone. So I'm seeing today was a big sell. I see there was a good sell here for the traders. This on the euro USD. So the speculation of this currency means you're buying euro and you're selling dollar at the same time, or you're selling euro. If I click sell here, I'll be selling the euro and buying the dollar at the same time automatically. If I click buy here, I'm buying the euro and selling the dollar at the same time. So, but it will get easier as we continue. So you'll familiarize yourself with the platform as we move forward. So why should we trade? So how it's traded is you trade one currency against the other, and probably we'll sell it at a higher price to make a profit. So if we bought here, for example, if we bought at around this point, let me show you guys. So most of the time you're looking to buy low and sell high. So let me zoom out. Yeah, this is a good one. So if, for example, this was my support, usually call it that line, the red line, that my support, and probably this was my resistance. We'll be getting to this later, especially as we continue the next class. So I've put some lines there. So this will become my support. This will become my resistance. So down here will be my strongest support on H1. So I have put a red line there. So this zone, around this zone now will become my strong support. And of course, up here will become my strong resistance. So let me put another line here. So yeah, around there. So just a minute, guys. 77. So let me remove this one. So let me just put one line so that at least you can be able to see. So this is my main, this is support and this is resistance. So, but this ones we'll be tackling them technically as we continue with our class day by day. So I'll just introduce to you how you're buying and selling. So if the euro is going to rise against the dollar, you can buy the euro USD currency pair and then hopefully sell it at a higher price to make a profit. So this is the example I'm showing you. So if you got a buy here or a buy here, you would have made good profit, good profit. Let's see how many pips probably would have made. I'm audible. Or I go. Oh, fast. Oh, sorry. It's okay. It's okay. So, for example, this was today, yesterday, or let's just use yesterday. Yesterday alone, the Euro USD moved up 63 pips. And then today, I'm seeing it has dropped, and you can see there was a, they call it a double, whatever. You guys who have been trading, today it has dropped 53 pips. So that means yesterday, going up, you'd have made some money up 63 pips, and going down, you'd have made today around 53 pips. So what we are doing, we are leveraging on the power of how the markets are working. Of course, there are global events that make sure these markets are moving up and down. For example, the fundamental analysis and the rest. But those ones we'll tackle in another class, so not today. So let me continue. Oh, do I have guys waiting? Yeah, I have two here. So a minute, guys. Okay, let's continue. So we are talking about the Euro USD. So Euro USD currency is going to rise. You can buy the Euro USD currency pair low and then hopefully sell it higher. The US dollar gains, then you'll be in a losing position. So let's say, for example, here now you bought, but the market was going down. Now, at this point, you will be at a losing position. So I need you guys to understand, you guys dwell on the how much they are going to make in the market. The idea is you need to take care of the risk. You need to look at the market as how much you're willing to lose, because if you're able to understand how much you're willing to lose, then you'll be able to control your emotions. You're also able to have risk management, and you always be at a profitable position. So at least I've been able to explain how the buying and selling works. So why is it popular? Why is Forex very popular? So number one, why is it so popular? It offers the most amazing potential lifestyle of any profession in the world. It's not easy, of course, but if you're determined and disciplined, you can be able to make it happen. So here's a list of skills you will need to reach your goal. So if you're willing to come on board, of course, join the classes and make sure, and I make sure here that you're profitable, then these are some of the skills you'll be needing. You'll need ability to take a loss. So this is one of the most difficult things I've met with most guys out here. They are not able to take a loss. You know, it becomes so emotional. It doesn't work. It is not for me. I will never do it again, you know, and stuff like that. The idea with Forex is all about discipline, 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 discipline. So you'll need to have to learn to take a loss without becoming emotional. So if you lost $100 or $200 today, you let it go. We usually have a mantra with my guys. We usually have our own team. Then we say we live to trade another day. So if this day was a good day, we say, yes, it is okay. If it was a bad day, it is still fine. I will live to trade another day. So another thing, you need confidence to believe in yourself and your trading strategy. So one thing at Tigerwit or at TWA here Educational Center, will be guiding you how to come up with a profitable trading strategies. Myself, I have a few strategies, almost 100 plus, short term, long term. You can be doing scalping, you can be doing day trading, you can be doing swinging, you can even be doing positioning. But at the end of the day, we need you to have more wins than losses. Say we can give you a win percent ratio at 60 or 50. Even 50% win ratio is good as long as you're maintaining consistency. If you do 60, 70, then of course you're doing very, very well. So you'll also need confidence. So believe in yourself. So some guys are always looking for signals. I want signal, I want signal, I want this, I want this. For me, I'll teach you to be independent. Independent in a way that you enter the markets confidently knowing if I'll take a profit or loss, I'll be okay with it. But as long as your trading strategy is fine, then you'll be good to go. Then another thing, you need dedication. To become the best Forex trader you can be, it's a lot of dedication, a lot of time, a lot of reading. So nothing comes easy in this life. We have to always work for it. Then discipline. So this is one of the main things that I really, really insist for the new guys coming in. Discipline, discipline, discipline. Without discipline, you cannot make it in this market. It is a very violent market. It can give you and it can take away very easily. So if you have good discipline, then you'll be very successful. So you need to learn to remain calm and unemotional in a realm of constant temptation. So let me explain this here. I'll use USD Chef, where we had this is one of the pair, or let's just use USD card. We had said we'll trade USD card, and I'm seeing the news were already out. So let me show you guys a little bit. So this, we usually call this the calendar. So every week we usually have a calendar. You can use either Forex Factory or you can also use investing.com. So, and the idea with the Forex, the calendar is to know what news will be affecting the market that week. So like for this week, we didn't have much. You can see there was a holiday. This was on Easter Monday. You can see there was bank holiday the whole day. Then you can see there was this treasury, Yellen was speaking. Then we had the RBA statement. Wednesday was a bit quiet. Biden was speaking. There was FOMC, we usually call it Federal Open Market Committee meeting. Is basically the board, the federal guys who meet to be able to discuss the interest rates. Are we hawkish? Are we dovish? Or do they remain unchanged? Those terms you'll be learning them as you come on board. Then Thursday, there was Fed chair. So today is Friday. So I needed you to see what happened to Friday. So you have to wait to see the value that will come out here. Was it better than the forecast or was it worse than the forecast? So if it was worse than the forecast, most likely the pair would be going down, like what happened here on M15. So I'm believing this was worse than the forecast. So that's why you saw this dip happening. So if it was better, so you go back to the calendar. So let's go back to the calendar and see, 3:30. It's still loading. So we are waiting to see the results that happened here on unemployment change. So employment change and unemployment rate. Basically, we are looking at how many people were employed. So this is it. You can always check it here. This is the change of the number of employed people during the previous month. I need you guys to understand employment is one of the key factors the central banks have to look at. That this now is the Bank of Canada. So if you're looking at the central bank, you have to look at the pair. This is CAD. So we're looking at Bank of Canada. So the change in the number of people who are employed during the previous month. So I can see there were over 259 people, or 259.2 thousand people that were employed in the month of March in Canada. So that means CAD gained. So if CAD gained, that's why you're seeing USD CAD lost, because now we are looking at CAD on this other end. But if I was to drag, let me drag CAD Chef, for example, this one. So if I drag CAD Chef, you realize there was a rise. Can you see, guys? I think you can see this was better. This was good. That means the results were better than expected. So as you can see from our calendar. So I think it was good. Let's see at the unemployment rate. Oh, sorry, guys. So the unemployment rate here, let's see what happened. So it was 8.2%. So it was also good. So that means for CAD, both employment rate, employment change and unemployment rate, things were okay. So that's it. So at least this is for fundamentals. I'll be teaching you guys how to trade them before and even after the news happened. So let me finalize with our theme, because I told you guys I won't take much of your time. Meanwhile, you can be asking questions as we continue. So flexibility, you need to trade changing markets successfully. Last year, we had a very volatile market because of COVID, but at least the markets are stabilizing. They are in between. They are not yet where they were before pre-COVID, but at least they're stabilizing. They are in between. So then you also need to stay focused. You stay concentrated on your trading plan and do not be astray or do not stray off course. Then there's something else we call logic. You need to look the market from an objective and straightforward perspective. So you need to be logical. Then organization and also patience. Patience, this is one of the most important things you will need to learn. If you're not patient, I don't know how I'll assist you, because there are times the market will reward you. Say, for example, somebody bought around this area, and you see the market dropped from here to here around 117 pips. So it's either you take the loss or you hold this, and of course, I'm hoping you entered with a small lot size. Of course, if you didn't, you'd have lost that position or that account. So it's good to always remember risk management is paramount and is everything. There's something we call realism. To not think you are going to get rich, and understand the reality of market and trading. So this is a business like any other. So don't think you come here, become a millionaire, get your big car, big house. Basically, it's a market like any other. It's a business like any other. So you have to be patient. Be patient to grow. And of course, with me here, I've trained very many guys out there who are very successful. I think I have almost 200 or 300 plus guys trading and doing well out there. I feel good. So welcoming you guys here is to let you know that you're at the right place and basically you'll be successful. So self-control, do not overtrade and over-leverage your trading account. So I'll be talking about leverage, and I'll also be talking about overtrading. Basically, why do most traders lose? Why are they losing? Why the losses? Why is 95% people losing? I'll be telling you that on our next that will be next week around. Maybe I'll give you guys the details. So let's go now to the why. Why your why should always be bigger than your how. So let's go to our why. Why should we trade forex? Why? Yes. Yeah. It's recording. Yeah. So now let's go to why. This is our why. One most important thing I really love about this market, it's very liquid. Liquid means it has a lot of money. Basically, I can come in, get in, make a $50 today, withdraw, go get some lunch somewhere, KFC or wherever. Basically, it's liquid. Liquid means you can have money all the time. Anytime you want, you can always come in, make some good money, and of course, you can always get out. So number one, it is liquid. It is up to the volume. The daily volume exceeds 5 trillion. But as I've told you, once the 1.9 was pumped in last year, it hit 7 trillion. And then if this 2.5 will be added, I believe we are going up to $9 trillion per day. So this will be a lot of volume. So that is to mean there are so many players who are coming on board right now. And also COVID happened, people are looking for work from home. This is also one of the main businesses most people can come on board, because you can do a Zoom, you can trade from wherever you are, as long as you have your phone or you have your computer and have a good internet connection. So this means dense liquidity, which makes it easy to get in and out of positions. So for example, let's go back to our euro. So this was our card. Now I'll use our card. So you can see this spike. So this one, I won't tell you what it is. I'll tell you next time what happened. So, but I wanted you to see the liquidity. Look at this chart. This is a lot of liquidity, especially when you see these long bars. We call them bars or candlesticks, like this one. This is liquidity. So that means the market is moving. So if you got in here, and that was today, you made this short here before, of course, you'd have made around 150, 156, 158 pips. So anytime, anywhere is making money time. So you cannot afford to be left. So that is number one thing, the liquidity. That is one thing I really love about the market. The liquidity, you can get in and get out anytime, make money, draw, and do something with yourself. Then another thing, you can trade wherever you want. There's no opening bell of the market. You can enter and exit a trade wherever you want. From Sunday around 5 p.m. So our time, the market here, I think opens around midnight Sunday up to today. By today midnight, most of the market would be closed, apart from the cryptocurrencies, because them they trade even during the weekend. Another thing is the ease of access. Ease of access means from here, like us here in TWA, we can always help you guys open your trading account with as little as $250. And of course, you verify your account, and right away you get something we call a straight through order execution. That means you get directly to the liquidity provider, of course, and maybe making some good pips. Another thing, you can decide to have few currency pairs to focus on. If you're beginning this journey, I'll let you know it's good to focus on the dollar. The dollar is the most important key currency we're always looking at, because 81% reserve currency is in dollars. So that is to mean that if you focus more on the dollar, you'll always be making something good with yourself, because you'll only look at the US, you look at their politics, you look at their interest rates, you look at, you know, how the infrastructure is, number of jobs created, and so forth and so forth and so forth. That is the lesson for another day. So you can decide to concentrate on few currencies instead of getting lost to analyze thousands and thousands of stock. Another thing, you have the freedom to trade anywhere in the world. That means in the world with only the requirement of a laptop and an internet connection. As I've told you, work from home. This is where we are headed. Everything is going digital. You can do without Zoom, Skype, and Netflix and the rest. So this is our new normal. I'm hearing it's being called the new normal. So another thing is commission-free trading with many retail market makers and lower transaction costs. So pips and spreads, they are very low. The fees and commission, they're also very low. So that one I'll be explaining to you, especially the guys who will be joining us on board as we continue with our classes. Another thing is volatility. It allows traders to profit in any market conditions and provides for high profit probability weekly trading opportunities. Also, there is no structural market buyers like long buyers. So the beauty of the Forex, you can go long, you can go short. Going long means you're buying. Going short means you're selling. So that means like here, you can always be going up, buying, selling, buying, selling, buying, selling, and so forth and so forth. So I believe that's okay. So we are almost there. So what else? So while the Forex market is clearly a great market to trade, I would note to all beginners that trading carries both the potential risk, or I mean the potential for reward and risk. That is to mean you can make money and you can lose money. Many people come into the markets thinking only about the reward and ignoring the risks involved. This is the fastest way to lose all your trading account money. If you want to get started, you have to be on the right track. This is to mean that you need to understand there are risks that are always there in the market. So the risk number one is you can lose money. That one I always tell guys, you can lose money. But the idea is learn to lose little and learn to win more. So I think I have less than a minute remaining. So now, guys, I think I've given you your why. Your why is, number one, you need to make money. Without making money, you know, of course, things have become tough and all, but we need you to make money. Number two, you can trade from anywhere in the whole world. Then the few currency pairs to trade, volatility is big, and trade whenever you want. So guys, that was our why. So we'll be delving more into our how on our next classes as we continue. So unless, do we have, guys, anyone with a question? Maybe now I'll come back to, oh, sorry, screen post. So guys, anyone with a question, maybe you can let me know so that at least we can be able to be together. So any question, guys, you can raise your hand. You can write a message here, or here's the chat. So, but we have recorded the whole training. So at least, guys, you'll be able to have this recording uploaded. So unless we don't have anything, I'll say thank you, guys, and